plus 12.5%. That's the key number for today's New Jersey 2024 January market report. Hi, I'm Jeff Massey. Welcome to the channel. If you haven't been here before and you're looking to learn all about the New Jersey suburbs of New York City, whether from a buyer's perspective or a seller's perspective, then please consider joining our Subs of NYC community. We'd love to have you. And if you're looking to move in the next 7 days or 7 months, give us a call, shoot us a text, or send us an email so we can help you make an easy, stress-free purchase or sale in the New Jersey area. So without further ado, let's jump into the computer and show you a little bit more detail of what's going on in the last month or so. Now, it is March, so I'm coming out with this, and I'm going to say this a couple times in this video, but hopefully in February, for February's data, I'm going to get this a little bit quicker out. I didn't realize there was a more direct source I could have gotten the data from, and so we're working with the New Jersey Association of Realtors here, and you've got all the information that you need in this presentation. And I'll say it again at the end, but I'll say it here as well. If you're looking for town-specific data, I'd love to share that information with you. Just reach out to me directly. My info is down in the description. And I'd love to help you learn more about this particular market environment that we're in. We'll call it interesting. I think that's the key word. So 12.5%, what does that number mean? Let's get into it and look at the presentation. Okay, so as you know, this is the New Jersey Realtors Association data. I'm taking their PDF directly, and this is for January 2024. Here we are. It's already March, I know. I hope in the future I'll streamline this process because I realize I can get this information a lot quicker from the original source. But anyways, that's not important. This is a quick overview sheet. We're going to go through a couple different slides within this. This is actually the last page in the deck, but I think it's a good summary to show you where we're going to be starting for January. You can see new listings here. Well, actually, this is a summary. Let's just jump in and scroll back up. So here we are, new listings. It's in terms of actual new listings coming on. You can see a good spike here from December to January in terms of single family. I'm going to look at pretty much single family today in order to keep the video going a little bit quicker than I did last time. But you can still see here, still negative 3% from January to last January 2023. So even though we had a good kick in seasonality down here, you can see on the chart, we're still below the levels that we were even in 2023 and even worse into 2022 if you look back over here. So as we run over to pending sales, you can see here still below the previous year by almost 5%. A little bit of a tick in seasonality, but just not quite there in terms of where we were in 2023. So let's go to the next slide here. Closed sales, again, similar trend, but now we're getting into the almost double digits here. Negative 10%, almost negative 10% here on the overall closed. You can see here this dramatic decrease from 2022. So still, again, very low in terms of seasonality as well. So let's go into the next one. Median sales price. Now here's where the numbers get juicy again. You can see here this big shift in terms of the appreciation that's going on within these numbers. Now keep in mind, these are numbers that are only looking at sales that have closed, right? So this isn't necessarily that values have gone up 12%, let's say, but actually looking at the sample of what closed, it was 12% higher than it closed in 2023. And even 2023 was 2.5% higher than the year before. So you can see that going up on the upward trend. But what I'm trying to say is in that particular sample size, if you were to compare apples to apples, well, that's kind of my point. It's kind of apples and oranges when you compare the year before to the next year. There could have been a few more expensive properties for that particular year, and that's why we're seeing that. But overall, in general, sure, we're seeing appreciation, but this is just comparing year over year actual samples of data. So if that makes sense. If you don't understand that, feel free to get in touch with me. I'd love to describe that a little bit more detail to you on a one-on-one basis because it is a very nuanced thing to think about when you're looking at population versus sample size. It's a very statistical thing to look at. But my point here is 12.2% compared to the year before. So as I keep saying, it's probably, as they say, yesterday was the best time to buy. I'm not trying to push everyone into buying, but I think if you are able to afford a monthly payment that's going to achieve close to your dream home. Maybe it's not your perfect home, maybe it's not your forever home, but it's going to get you on the property ladder, then this is one reason to start thinking about that. And this is median sales price. If we looked at average sales price, it's close, very similar number, 11.8% here. You can see for comparing to last January 2023. And again, look at this upwards movement here in the last 4 years. You can see that is, in my opinion, looking at the systemic lack of inventory. In mortgage prices, if you think about it, the mortgage rates changed around this point in the graph. Let me clear that up. The mortgage rates changed around this point in the graph, let's say, or maybe this point in the graph, but prices kept going up. So this is not inventory due to mortgages being higher rates than normal. When I say normal, in the last couple of years, historically, these are pretty much on average rates that we're seeing. But when I say that it's more of a systemic inventory problem, it's because we don't have enough homes and we have higher growth of population. So that's why I think this graph here really shows that really well. Same with the median sales price as well. So if I go over here to the list versus received, again, we're above the previous year in January, 1.8 above last year, 100.2, if I circle that for you there, in terms of January versus January. This is looking at strategically. I think it's strategic pricing that's happened in the last, 5 to 10 years. When you go back here, I don't think strategic pricing was really a thing back that far. I know back then I worked in new development sales, so we would kind of list at where we needed to hit, and then we would wait for the market for people to get into the market to catch up with us. It's different when you're doing a resale and you want to get a lot of eyeballs on the property. You need to strategically price, which is something I've talked about before. So you're still seeing that on average over asking price. This is extreme averages when you're looking across entire state of New Jersey. When you look at very specific towns, I've talked about it before, and you can look at my past video from last time, which I talked about the most expensive towns in the GSMLS. Those towns go 5, 10, 20% above asking. And again, that's more based on strategic pricing, not necessarily because of this huge appreciation of value or anything. It's really because of that strategic pricing, and keep in mind. So bear in mind, if you're coming in, be prepared to make a very strong offer. And that can be just price, but it could also be terms of the deal, like how quickly you can close. One thing that was interesting, I was listening to a call this morning on our office meeting. One of the mortgage people pointed out, like, one really good incentive for sellers to get buyers' offers looking more attractive is to offer a rent back period where that seller might not be able to find a place in time, right? Because they're having the same issue that other buyers are having. So give them a couple months after closing. It makes it a little bit of a headache with the attorneys. We have to get that figured out. But it is something we can do where we can incentivize the seller. Maybe you as a buyer aren't in a huge rush, can incentivize the seller, give them a little extra time in the home post-closing so you can lock in your rate and figure out the closing process. But post-closing, give them a little bit more time to pack up their things and find a new place. So that's something else when we think about terms. There's price, there's down payment, there's like I just said, about keep giving them some time back in the house. There's all these little terms that we can try and negotiate to incentivize. There's all these other contingencies, which I'm not even going to go into, but keep in mind these little things when we're talking about list to sale price and how to get that offer accepted. So let's go on to our next slide here, clear this out. Days on market, again, similar situation. If we're looking at January to January, you can see here it is down 13% in terms of average days on market. Again, this is because there's no inventory, right? So if we look at that trend downwards here, there's just not enough inventory to go around. So when a home goes on the market, especially if it's priced strategically, so it's funny because if I leave that line there and I go back to my average days on market, look at that trend line. It's like a supply and demand imbalance, exact X, right? So when we think about this in terms of days on the market, what I was about to say is if it's priced strategically, it can go very quickly because you're going to get bids above asking. It's not going to sit and linger. So days on market, again, in a low inventory environment, moving down and down and down. And if we look at affordability index, similar trends that I talked about last time. I'm going to skip over this one because if you haven't seen the previous one from the 2023 full overview, go check that out. I talk about housing affordability there in more detail. And again, nothing's really changed. So let's go to the next one. This is what I really wanted to talk about in terms of days on market and inventory of homes for sale. We're looking at huge imbalance there going down. But if I go on to the next one, months of supply, this is what I wanted to show you. We've even ticked down, I guess, from last month, 2.5 here. If I just highlight those two, let me go over here. If I just highlight these two numbers, it's the same number. When you look year on year, it is below, down negative 3.8. But again, this is a seller's market. If you're on the sidelines thinking like things are going to change in the future, again, I don't think they will. The inventory situation is here kind of potentially for the next few months or more. So I think bear in mind with those offers, they need to be very strong because this is a seller's market. The average where it's kind of like a balanced equilibrium is around 6 months of inventory. As you can see, we haven't been at 6 months since about 2016-ish here in terms of inventory. So it hasn't been a buyer's market since way back here, in this section. And then in this section, we're really in that seller's market strong. I can't say that enough. And that's why those bids need to be very strong. So I'm talking about this more from the buyer's perspective. From the seller's perspective, I think it's obviously advantageous here. But again, you need to price strategically in order to make sure that you're meeting the buyer's expectations, getting the most eyeballs on it. But then you don't want it to stagnate. So this is where, going back to days on market, you don't want that to extend very long because the longer it's on the market, people start to see, okay, it's still coming up in my search. There must be something wrong with it. Like, why isn't it selling? It's probably because it's priced still a little too high and you haven't gotten enough eyeballs on it quickly enough. So anyways, I know I'm a broken record about that, so we'll keep going here. Okay, so going back to this summary sheet that I started with, what are the quick highlights? New listings still down a little bit. Hopefully we're going to get that spring kick maybe we'll see it in the February and March data. Pending sales down a little bit, closed sales down a little bit. This is all, again, coming from that lack of inventory. But like I said at the beginning, the median and the average sales price are up. When we look at January 2023 to January 2024, we're up 12.5%. So again, yesterday is always the best day to buy. Days on market is about the same when we look at December 2023, but when we look back all the way to January, we're down 15% days on market. So keep that in mind. Again, all averages across the state of New Jersey. Affordability index, as we mentioned really quickly, is down. Supply of homes in terms of months, still level there, 0% change in terms of last January, 2.6 months of inventory. So very, very tight. So that's going to do it for our January 2024 market wrap up. Sorry, it's a little bit late. In the future, I'm going to try and get this data a little bit quicker. And for next month, that way we'll have it. If you're interested in getting town-specific data, I'd love to go over that with you directly. I can share you the town-specific sheets from the New Jersey Association of Realtors and get that over to you. That's something you can't get if you are a general public. You're going to have to get it through a realtor like myself. I'd love to share that with you, whether it be Summit, Chatham, Maplewood, Milburn, all the Midtown Direct towns on the Morrison Essex line. I'd love to share that data with you. Once again, my name's Jeff Massey. Thank you for letting me into your home today, and I hope that together we can help find your next one or even sell it. In the meantime, we'll see you in the next video.